I'm Jordan Lazarus, CEO and founder of Zen, and you're watching Taking Stock.
2 minutes to go into the close here on this trading Friday, December 19th for the second consecutive session here on Wall Street. It is nice to see at long last a fair bit of green on the big board here at the New York Stock Exchange after 4 consecutive days of losses. Yesterday in positive territory, today in positive territory as well, with the S&P 500 expected to finish up about 0.8%. Tech, healthcare, industrials, those are your strongest performing sectors in the S&P 500 in positive territory, with utilities, staples, and discretionary stocks actually leading losses to the downside. Welcome to the broadcast, one and all. You're watching Taking Stock. I'm your host for this Friday edition of the show, JD Durkin. Just moments away, my friends, from the ringing of the truly iconic closing bell here at the big board. The team from Orla Mining, ticker symbol ORLA, set to do the honors. Oracle shares very much in focus here on the day, popping 7% after that big announcement that TikTok agreed to sell its U.S. operations to a new group that will in part include Oracle. We'll talk about that more throughout the afternoon. Volatility in retreat for this risk-on day for equities. Metals moving higher on the day as well, with silver yet again reclaiming a fresh all-time high of $67 an ounce. Oil benchmarks, WTI and Brent, both in positive territory as well. And the crypto majors finally getting back at it. Bitcoin trading back up to an 87 handle. Eric Criscuolo from the New York Stock Exchange is on deck. He'll join us right after the bell to get his perspective on a potential Santa Claus rally and so much more. But for now, time for the close. And there you have it, marking 2 consecutive days for the major market indexes in positive territory. The final tail of the tape on this Friday, December 19th. The S&P 500 finishing up, let's call it 0.9%. Looks like the Dow will finish up about 0.4. The NYSE Composite Index up about 0.5%. And the small caps in on the action, up 0.9 on the day. Eric Criscuolo, market strategist here at the New York Stock Exchange, kicks us off for this Friday edition of the show. Happy Friday. Thank you for being here as always, my man.
Always love to be here with you. Thank you.
So what did you see across general price action? Nice to put those few days of losses. We had 4 consecutive days of losses after Wednesday's session. Green on the big board yesterday and again today.
Yeah, it's always nice to obviously finish the week on a strong note. We were kind of worried about how we would, finish coming into the session or into the closing ends of the year. Looks like things are maybe kind of stabilizing. We could get that Santa Claus rally that everybody talks about. The AI trade was a little bit wobbly for the past couple of weeks, maybe stabilizing a little bit. That was obviously the story of the year. So if that can stabilize, we can get a good footing for 2026.
Yeah, what do you make of how quickly the narrative shifts with regarding the durability of the AI trade? Because some days it seems like everything is great. We are so back. Tech stocks are off and roaring. And then the very next session, sometimes just a few hours later, investors have these renewed concerns about circular financing and how strong AI actually is.
We were just talking about that before, and in the beginning of the year, it was if you had a press release with AI in it, your stock was going up. Didn't matter what you did. Now, investors are becoming more discerning. They're actually looking at cash flows. They're looking at all these expectations, these future revenues, saying how is the company actually going to do this? How are they going to fund it? You're starting to see investors kind of pick winners and losers. So that diversification of investor thought is kind of something to kind of be looking out for as we go into 2026.
What do you track, if anything, with regards to options expiration? We usually get this high volume into the close the third Friday of every month. We also got some rebalance for the S&P, a bit for the small caps as well. Mm-hmm. What does that usually mean, and what do you track on days like today?
Yeah, it's a triple witching, which is quite famous throughout Wall Street. Usually very high very high activity, sometimes higher volatility. It's because a lot of the hedging activity for the options, both the options itself plus the underlying stocks, all those hedges are kind of being fixed or then rolling off at expiration. And what that does is potentially coming out of expiration, it kind of unlocks the market, and then the market can kind of rediscover if it was going to go higher or lower. So the price discovery mechanism kind of kicks back in. So actually we could see things, maybe start to move higher or lower, more so coming into the end of the year.
And often at the end of the year, sometimes you get some window dressing from the fund managers out there, tax loss harvesting. Some of these wonky things can kind of throw off market expectations in the final trading days and weeks of the year. Are there other big catalysts on your radar as we get closer to Christmas Eve, which will start our favorite time of the year, the potential Santa Claus rally here on Wall Street?
Yes. So, besides the tax loss selling, you do have the window dressing as well. That's kind of been done though. That coming into November, that starts to kick in. A lot of mutual funds end their year in that time frame. So a lot of the selling is already done. Although there is some obviously as you go into the very end of the year. But just looking forward, obviously the Fed is a huge issue. Seems like they got their cut in that they needed to get in. There's still about a little more than 2 cuts priced in for 2026. The big question is going to be who gets nominated by Trump, and then what his or her, strategy is, or how they corral the rest of the members. Do they really push for more cuts? And if they push for more cuts on the short end, is that going to increase rates on the long end? Because we're actually seeing that. The long end is moving higher while the short end is moving lower. Very important to look out for in 2026.
You mentioned the Fed. The Fed likes to stay data dependent. Getting reliable government-based data has been difficult to come by given how long the government shutdown was. But we did get a CPI print this week, but a few analysts on the street are saying maybe take it with a grain of salt. We didn't really start gathering the data until the back half of November. Some pricing pressures might be thrown off because of Black Friday. How important will the next prints of inflation be to kind of determine the overall trend? Much
more important. If you saw the CPI print yesterday or the other day, there was basically 3 line items on it, and everything else was blank for November. It was, I don't want to say it was worthless, but there was nothing there. And actually, Fed President Williams, New York Fed President Williams, kind of spoke about it today. So that is being discounted heavily, I believe. The next prints will obviously be much more important.
Yeah, and ironically, it was New York Fed President John Williams kind of kickstarted the possibility a few weeks back in that address down in Costa Rica of getting potential interest rate cuts. It didn't seem like we would for the last meeting. He spoke, the markets listened. Anything else on your radar you think we should be paying more attention to in the final weeks of 2025?
No, listen, I think just steady as she goes, as long as the AI narrative continues, no major tweets from Trump or social posts, whatever you want to call it. That's always something to look out for. Commodities are absolutely exploding, especially the metals. We'll see if they just have a blow off top, if they keep on going up. I don't know. I'm not a commodities expert, but that is absolutely something to keep your eye on. But other than that, I just hope everybody on this floor, everybody in the world has a very Merry Christmas and a Happy New Year.
All the best, and all the best to you and your family. Eric, thank you for always taking the time. You're a true professional down here. I learned so much from you every time we talk. Enjoy your weekend. I'll catch you again next week.
Thank you very much. It was great.
Jeremy, grab your mic. Bobby, you and I are going to head for a walk this way, and we're going to talk about one of the NYSE companies that had a big earnings report after the close yesterday, and we really saw it drive down in price action today. That's, of course, shares of NKE. It is Nike. Bit of a mixed picture because the company did report a big beat on both the top and the bottom line, but did report declining profits and a bit of kind of lackluster numbers out of China. China is a huge market for Nike. Earnings overall for the company 32% lower than they were from the year ago quarter, although we did hear from analysts at Jefferies. What's up, Marcus? I got the live broadcast. I'm going to walk right by you, bud. Pardon me. Merry Christmas, Marcus. Good to see you, dude. Analysts at Jefferies maintaining their buy rating on Nike stock. Shares are down, however, for Nike, 23% from the start of the year. Bobby, we'll take a look here at one NYSE notable on the day. How about the best performer in the S&P 500? The team from Carnival Cruises, up almost 10%. A beat on earnings, a miss on revenue, but investors saying, we'll focus on other things. The company reinstating dividend payments and a notable increase in annual profits. Shares of Carnival Cruises are up 22% from the start of 2025. FinTech TV contributor Rachel Pether recently sat down with Alton Miller. Alton is the CEO at Hecto at Solana Breakpoint in Abu Dhabi. Take a look.
Hi everyone, we're here at Solana Breakpoint for the first time in Abu Dhabi. I'm Rachel Pether and I'm joined by Alton Miller, who's the CEO of Hecto. Alton, thanks for joining us today.
Thank you for having me.
So tell me a bit about Hecto. What was the problem that it was looking to solve?
Well, private markets have been closed and inaccessible for so long. And interestingly, as someone working in private markets, I've noticed that this access has worsened over time. In the last 20 years, companies have simply stopped IPOing. I'll give you one data point. NVIDIA went public with a valuation of roughly $500 million. SpaceX is still private and is pushing for its next funding round at 800 bill. So something has fundamentally changed here, right? Which is that private markets have become even more closed. And I think that that presents a major challenge, not only for capital markets access, but also for society as a whole. You know, we ask the question, what does it mean to live in a society where you cannot invest in the companies that define your generation? You open the newspaper or your feeds, who do you read about? SpaceX, OpenAI, TikTok, and yet none of them are listed. So I think opening up this asset class is really a generational challenge and one that we aim to solve. Yeah.
So that is the why, the ethos. How does this translate to the what? So what are actually the practicalities of that conversion?
Well, there's a number of different ways that you could do this. And indeed, we've seen great progress being made by the likes of a couple of players in the industry. I would point to Robinhood. I would also point to Ventuals. We're really introducing a sort of day trading style experience for this asset class. And I think that's very important. You know, anyone should be able to speculate. But our view is that we want to introduce passive investing into this market. So you could think of us much like you guys over at 3iQ, the asset manager for private equity. So the products that we're building, first of all, is an index for these top, we call them hectacorns, right? Companies that are still private, that are worth $100 billion or more. There's only, I think, 7 or 8 of them at the moment. The likes of, we've said already, SpaceX, OpenAI, Stripe, and so forth. So introducing an index for those. We'll also look to introduce other indices over time, potentially for robotics, or sports teams, perhaps even just the Musk index, right? The possibilities are endless, but we don't want people to day trade. We want people to come in, invest in our products, and compound for years to come.
So obviously one of the challenges with private market investing, well, I guess pros or cons, whatever way you look at it, is the transparency in the pricing. So how would that work from your perspective? You're creating this index in terms of keeping those prices up to date and transparency.
Yeah, we're very grateful to work with a number of data providers. Everyone's in this market now, all the way from NASDAQ to startups who are aggregating secondary market transactions across all of the brokers. So we've aligned our pricing methodologies with some of the other key players in the industry. And we're able to produce a daily NAV, right, which is in line with aggregated sources across the sector. And then, of course, on a more real-time basis, we have, the likes of Ventuals, the likes of Robinhood, which are offering this intraday pricing. We feel that's less important for our audience, who are looking simply to get into our products and compound over time. But inevitably, as this market evolves, I think you'll see even more sophisticated and, second by second accurate pricing emerge.
I think it's absolutely great what you're doing, really encouraging the democratization in this space, and can't wait to see you back here next year and looking at what you've achieved.
Thank you so much. Yeah.
Thank you. That's awesome. Well done.
All right. Cheers. Bye.
First investor.
Welcome back to the show. You're watching Taking Stock live from the trading floor of the New York Stock Exchange. Time now for a few fintech, crypto, and artificial intelligence related headlines for your Friday here on Wall Street. The crypto majors all up in positive territory in no uncertain terms. Don't call it a comeback though. Bitcoin up 2.8. ETH up 5.6 and Solana up 5.8 as well. U.S. antitrust regulators and other news have cleared NVIDIA's $5 billion investment into Intel, and in doing so, removing a key regulatory hurdle for a deal aimed at shoring up the U.S. chip maker. Shares of Intel up 3% today on the news. And finally, Intercontinental Exchange, that is, of course, the owner of the New York Stock Exchange, is in talks to invest in crypto payments firm MoonPay. It's a deal that would value the company at about $5 billion. Moving on with the broadcast at this hour, Niraj Pant joins the show now. He is the co-founder of Ritual here on the trading floor of the big board. Great to have you. Thank you for joining us.
Thanks for having me.
Can we start first and foremost with a bit of an introduction to your work at Ritual for anyone unfamiliar? And Niraj, what are among your biggest priorities at Ritual now that we're finishing 2025?
Ritual was really designed with seeing all of the new growth in AI, large language models, and seeing that there was a big developer need for AI in the crypto space. Ritual is a layer 1 blockchain that's designed to natively interact with AI models and use them in smart contracts. And so we envision a bunch of new applications and use cases with this technology. And we've really designed a kind of a suite of products around making this interaction highly usable and scalable.
In what ways have you seen the broader blockchain, crypto adjacent space, and really the conversation change and evolve here in 2025, especially as we finally get some new regulations and more clearly defined rules of the road for the industry?
I think this is the first time we're finally starting to see where crypto fits into the world. I think especially we're here at Wall Street seeing how crypto is starting to integrate into Wall Street, into the financial economy. And really, I think this year was a big boon for a couple of large financial spaces and sectors, prediction markets being a big one, perp dexes, and stablecoins being the kind of the three big things this year. And so I think coming into 2026, we'll see more growth in those sectors as well as new sectors.
Yeah, how closely do you track the performance in your role of the crypto majors, and what do you make of the fact that we've had this ongoing sell-off, Bitcoin well off those highs of 126 to about 87, 88, kind of changes by the day, but it's amazing it comes at the same time that the institutional adoption of these underlying cryptocurrency coins and projects has really taken off.
Yeah, I think crypto's going through a sort of a reorganization and showing really you need to show results when building a crypto project today, whether a company or a tokenized network or things of that sort. And so I think this really is one. I think we're starting to see in the kind of high risk, further down the risk curve type of assets, taking a little bit of a break this year in crypto. And I think what we're trying to see is where value will get created over the coming months and years. But I think there are some new interesting ideas that we've been thinking about at Ritual and more broadly in the market.
What would you say are among the top crypto trends that you are most closely following right now? And do you have an outlook for the broader cryptocurrency industry for 2026?
I think what we're going to see is a growth in developers. Developer mind share, I think, is continuing to go up. In spite of kind of shorter term price action, I think the longer term trend for companies that are being able to build and new companies that are being able to be formed, I think is going up quite considerably. And I think in mentioning the categories I mentioned earlier around the prediction markets and the stable coins, to me, those are secular trends that will continue to grow over the coming years. And then, where I'm trying to spend time is what are the new user interactions that are, not being done yet, but will be in the next couple of years? What is the prediction markets 5 years ago today?
Yeah, that's a great bet. You got a lot of investors out there trying to figure that one out. What a year it has been for the rise of prediction markets, right? It's wild.
Yeah.
Absolutely has been. All right, Niraj Pant joins us here, co-founder of Ritual. Thanks a lot for joining us. It's great to have you.
Thanks for having me.
Happy holidays. Folks, don't go anywhere. Much more Taking Stock coming up right after this. Welcome back to the show. You're watching Taking Stock on this Friday edition of the broadcast, live from the trading floor of the New York Stock Exchange. Time now for the latest in the world of startups, raises, and rounds that you need to know before you head into your weekend. First up, Reuters reporting that Morgan Stanley is the leading contender to lead SpaceX's potential, I stress potential, IPO, which could, of course, if it goes through in 2026, be the largest IPO of all time. Next up, Coursera and Udemy joining forces in a $2.5 billion deal. It is a significant consolidation in online education as the sector bets big on AI-driven learning. And finally, at this hour, India-based startup Digantara raising $50 million to expand from satellite tracking into space-based missile detection. That sounds awesome. Speaking of awesome, here's our next guest. Not just excited to talk to him, he also just rang the closing bell. This is Jason Simpson. He is the CEO of Orla Mining. Congratulations. Thanks a lot for joining the broadcast.
Thanks very much. Thanks for having me on the show.
Of course. Can we get first and foremost, what was it like to ring the bell? You had an amazing team down here today. What did it mean to you personally?
Well, I can tell you that was a great experience for us. We've been listed on the NYSE for 5 years. This is our 5th anniversary, and I'm super proud to ring the bell today. Exciting for not only me, but the entire team. We've been on an incredible journey over the last 5 years, creating a lot of wealth for our shareholders, and today was a great symbol of that wealth creation we created.
For anyone who might not be too familiar with the day-to-day work that you and your team at Orla Mining do, what is the firm all about, and what are your top priorities as we end 2025?
Yeah, so clearly we're a mining company. We happen to be a gold mining company, and that's a pretty good place to be right now at the gold price that we're experiencing. And so over the journey of building up our mines, we have 2 producing mines, one in Mexico, one in Canada. We're building our 3rd in Nevada, and we continue to grow the size of our gold production and the wealth for all of our shareholders.
If you don't mind me asking, had you expected this incredible surge in precious and industrial metals that we had this year?
No, I don't think anybody can expect the kind of levels we're at now, except perhaps our founding shareholder, Pierre Lassonde, who's always stipulated that the gold price would be at these kind of levels. And so he was right, and he began this company with that intention of being ready for this gold bull market. And so the company prepared for the last 5 years, and we're ready to take advantage of it.
Orla Mining shares up 0.5% on this particular day, but up 136% year to date. Talk to me about the key factors that have been responsible behind such growth in the share price.
Yeah, so since Pierre Lassonde started the company, we've been busy finding gold, building mines, and creating cash flow from those mines in sequential fashion. And I like to measure ourselves from the start of that period, where we're well over 1,200% up. From the beginning of the company. This year has been another excellent year and a long history of excellent years for Orla.
You mentioned facilities in Mexico, Canada, one upcoming in Nevada, I believe you said?
That's right.
What should the average American, the average person watching this broadcast know about what actually happens at a mining facility like that? Because we see the headlines and we kind of have some sense, but you're really the expert here.
Absolutely, and so we look forward to building our 3rd mine in Nevada, and it will be just outside of Elko. We'll be the first mining company to be paying into the tax base of the Elko County, which is important to those local stakeholders. And we have a great GM in Don Dwyer who will begin construction next year throughout 26 and 27. We'll be producing from the site all through 28 and into the future. And what people can expect is not only our site operating, but the benefits that we generate from each site. In that particular case, the benefits to Elko County, the employees that will source out of the Elko region and Nevada region, and will continue to drill and discover more gold ounces on the Carlin Trend in Nevada, something that has been very prolific for not only Orla, but a lot of mining companies.
I got less than 30 seconds. What's on your radar for the firm as you head into the new year?
So we're going to take a break. We just had 2 busy days of strategy with the board. We've got our preparation for 2026. We'll take a quick holiday break, and we'll be right to work building our 3rd mine and setting up the future at our Canadian and Mexican operations and continuing to grow value in the company.
When you're rocking and rolling for the new facility in Nevada, please invite us. We'd love to come out there and see it when you guys are ready to rock and roll.
Consider yourself invited. We often like to invite special guests to our first pour. We look forward to seeing you there.
All right, do we qualify as special guests here on the show? I hope so. Jason Simpson, CEO of Orla Mining, congratulations on a terrific year. Thanks for joining the show.
Thank you for having me.
Don't go anywhere. After a quick break, we'll bring you the latest from Scarlett Sieber at Money 2020. More Taking Stock after this.
Hello, I'm Scarlett Sieber with Money 2020, and welcome to How FinTech Companies Actually Make Money. Today's feature, Brex, the FinTech that made corporate cards cool and expense management sexy. Not an easy thing to do, by the way. Brex went from being the ultimate startup flex to building a finance operating system for businesses. Let's unpack exactly how they do this. Remember applying for a corporate card, faxing documents, waiting weeks, and praying for approval? Brex said, what if we make this sexy and make a lot of money on top of this? 2017, San Francisco. 2 Brazilian founders launched Brex to give startups instant credit cards with no personal guarantees. VCs lose their minds. Founders flex Brex cards like they're Birkin bags, and Birkin bags are pretty special, we know that. So here's how Brex makes money. Number 1, interchange fees. Every time you swipe, Brex takes a cut. Volume is king here. SaaS subscription. Brex evolved into a spend management platform. Companies pay monthly for expense tracking, budgeting, and controls. Cash management. Brex earns interest on customer deposits and monetizes treasury services. And then there's the partner ecosystem. Discounts and perks from SaaS partners drive engagement and retention. Brex started as a credit card company. Now it's a full stack finance OS for startup. It's giving FinTech meets Notion vibes. Brex shows that the real money isn't in the card, it's in becoming the operating system for every dollar a company spends. From swipe fees to CFO dashboards, Brex turned boring back office work into a billion-dollar vibe. And that is your Brex breakdown for today. Back over to you.
Let's do it, folks. Welcome back to the broadcast. You're watching Taking Stock now outside the trading floor of the New York Stock Exchange. See how we did that? Because we've got this massive tree here. It's one of the biggest in New York City. Why not show it? We'll get you quickly updated on what to expect here on Wall Street next week. We actually do get a little bit of economic data despite the busy holiday few days. Consumer confidence, we will get a fresh reading on Tuesday. On Wednesday, fresh jobless claims, both initial as well as continuing jobless claims. A big sticking point for officials at the Federal Reserve as of late. And on Wednesday, Christmas Eve, the start of the Santa Claus rally window, the final 5 trading days of the year, and the first 2 of the new year. That's it for the entire team here at Taking Stock for this Friday edition of the show. Have a great weekend. We'll see you Monday. Woo!